Now, WPAY, the weekly pay universe ETF, the round till ETF that offers exposure to all the other single stock weekly pay ETFs also from round till, and the ETF that we've been talking about on and off throughout the channel over the past several weeks, just as of recently officially went negative as far as price performance goes, just price performance on the all-time chart. And keep in mind the ETF has been only trading since September, but this is definitely unfortunate because we've seen this play out time and time again with lots of ultra high yielders that offer a ton of income generation but decay over time. Not saying that's going to happen necessarily with this one, but it's something we have to talk about. So in this video, we're going to talk about the round till weekly pay universe ETF, its recent performance, and what this means for the ETF moving forward. We're going to go over all the distributions, the total return numbers, and everything else. So whether you hold a ton of this one or maybe just a small bit like I do, definitely stick around, drop a link down below, and let's get right into it. My A to Z dividend investing ebook has already helped countless dividend investors get started with their journey. And my custom dividend tracker, the one I use all the time on my videos, has also helped so many investors stay organized and has actually helped them see their dividend income grow. Well, today I have something even better for you guys. When you click the first link down below in my description and you grab my A to Z dividend investing ebook, today you're not only going to get the ebook, but you're also going to be getting the custom dividend tracker, which you can use to track your own dividend income ongoingly. Get direct access to my personal email where you guys can email me any questions regarding dividend investing. You're also going to receive a link to view all of my holdings inside my 7-figure dividend portfolio and see all the positions I add and take away ongoingly. And you're going to get for absolutely free my brand new high yield dividend investing ebook where I show you the power of maximizing some of these high yielding ETFs and teach you everything there is to know about that also. This is going to be your one shot to grab everything inside of one single bundle, but you got to move quick because I'm not going to offer this for long. Now with all that, let's get back into the video. Now for those of you guys that might be a little bit newer to WPAY, it says invest in round till's weekly pay universe WPAY for a diversified exposure across all single stock weekly pay ETFs designed for investors targeting weekly income and amplify performance. Now the round till weekly pay universe seeks to track the performance of the selective round till weekly pay universe index. WPAY is designed to invest in the eligible universe of single stock WPAY ETFs. The ETF currently, as of filming the video, has a 59.15% distribution rate. It then says why WPAY. This is a very popular reason that a lot of investors, including myself, like this one. Weekly distributions. WPAY distributes income every single week, offering a recurring income stream for shareholders. Diversification, also a main reason why I decided to grab some of this one. WPAY offers diversified exposure to the entire suite of the round till weekly pay ETFs. Now, what are some of the round till weekly pay ETFs? For example, the round till Amazon weekly pay one, we have the Google one, the Apple one, the Berkshire one, the Nvidia one. And I've said time and time again that the reason I like WPAY is that even though I'm interested in having some exposure to a lot of these different names, I personally would not want to have a ton of exposure to just one of them, which WPAY offers a very simple solution on giving you exposure or gaining exposure to all of them with a single click. Now, that being said, the most recent performance of WPAY has a lot to do with the underlying holdings in the ETF. Names like these are going to be pretty volatile because, again, they offer exposure to a reference, single stocks that on any given day could be up or down a significant amount. Now with high beta names like this, it's sort of a good thing and a bad thing. The good thing is that with the amount of option premium that there is to be made, the distribution rates can be massive with an ETF exposed to names like this, but also because these names are pretty volatile, varying dips in the markets. When the market turns ugly, you can definitely see names like this drop in value pretty quickly. Now, this is of course the big fear and the same story for lots of the ultra high yielders. This right here is one example of an ultra high yielding ETF that's down 91% just as far as price performance goes on the max time frame. Now, I'm not saying that WPAY is going to look like this anytime soon here. I sure hope not, because WPAY is inside my portfolio. But this is always the fear when it comes to these ultra high yielders that say yield 60% or even 100+%. It's sort of a ticking time bomb, hoping that the market and the underlines hold up long enough to pay you a ton of income generation but don't decay like crazy over time. Now again, WPAY has only been trading for a short amount of time. We can't really look at this max time frame price performance chart and get too crazy about it, but still, speaking for myself, it's unfortunate that when you max out the price performance for WPAY, the round till weekly pay universe ETF, it is unfortunately now red. Now with these ultra high yielders, you really have to look at total return as the main metric here. Total return being how much in distributions has it paid, also how much has the price performance gained or lost. So even though WPAY, for example, is down, let's say $1 or $2 as far as price performance goes, in theory, it would only take a few weeks of payouts to basically make even with that. But again, a lot of investors, including myself, are really sick of holding on to ultra high yielders or even high yielders that pay a ton of income but also decay over time. But because total return is the most important metric, if you look at the total return for WPAY, which again, this has only been trading since September, this ETF is up around 7 or 8% as far as total return goes. So nothing really to worry about as an investment, at least up until this point. Considering around a 8% total return over this short time frame would annualize out to around 60+%. Now, my personal takeaway for WPAY and its recent performance is the same thing I've always said about all these ultra yielders on my channel time and time again. They are very fun to have small exposure to, but because the underlying names are just too volatile, I personally would never feel comfortable having a massive amount inside my portfolio. Now, like I mentioned earlier, I do hold on to some WPAY. I buy a small amount of it every single day in one of my smaller portfolios, and so far it's been paying me a ton of distributions and has not decayed really all that much, so far so good. But really still with any of these ultra high yielders that, like I said, offer a 100%, 90%, 80% distribution rate, you have to be very careful because generally speaking, if they offer that sort of yield, it's going to be because they're going to be exposed to a very, very volatile underlying. So now that we talked about WPAY, the weekly pay universe ETF, I share with you guys the most recent performance, what this means for the ETF moving forward, and of course my personal thoughts on it. I lastly have a question for you down below. Are you currently holding WPAY, the weekly pay universe ETF in your portfolio? Let us know yes or no in the comments down below. If you enjoyed this video, make sure to please drop a like on it, subscribe, and I'll see you in the next one. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.